Hello, community. Hello, everyone. Happy Thursday to you all. I hope everybody's having a fantastic Friday so far, fantastic Thursday so far. Welcome to today's Thursday's community live stream on YouTube. We're always looking forward to these events as it gives us the opportunity to have a dialogue together. It gives us the opportunity to highlight ourselves, talk about the industry, the market, and of course our ecosystem, what we are about, and this is beautiful. So all of you that were able to make it in today's live stream, welcome. We are very happy to have you all here with us today. How's my audio, community? Is my audio good? I want to make sure that my audio is good, that you can hear me well. Beautiful, beautiful. Thank you very much. So community, again, like I said, very excited about today. Today's topic, as you see, the thumbnail gave it away. It's very interesting. We talk about don't be the exit liquidity. That's one of the main takeaways of today. Another takeaway of today is let's ensure that we understand the power of a community. It's very, very important. We often talk so much about community and how it's the largest and biggest assets that we have. However, today I really want us to really look at this more vividly, look at it as a bigger picture, clearly, to really understand the impact a community has and on a larger scale. And I want us to really, today, to really fully understand and grasp that. And then, of course, also to discuss how not to be the exit liquidity. And then, of course, we'll zoom in as always, build bridges, draw parallels, and see how we can finish up and wrap up the whole situation. So right now, as always, I always like to come to you, community, to see with you first, to see who is here, acknowledge you, welcome you. And then after we do that, we'll shift back to the main program. After we complete this, then I'm looking forward to check with you, follow up with you if you have any questions, if you have any follow-up questions that you want us to discuss, feel free, prepare your questions as we are going through this live session with you today. It's packed with information, just so you know. It will be a great one. And also, I just want to give you a heads up. I'll also create individual videos, also look out for them, that will tackle these topics individually. So it's more digestible for those that want to just listen into specific topics. But I think it's very important to just give you an overall view of the entire industry, of the market, what's happening, especially with all this anticipation of the ETFs. And what are those? Everybody just talks about, yes, ETFs are being anticipated and all that, but what are they? What are the implications, and whose, where's, and how's? Those are the questions that are going to be answered today in this live today. With that said, let me come and see who is here. Let me welcome you, acknowledge you, and then get to today's topic. As always, the live streams are always led by my brother Theo. Always great having you here, my brother Theo. And also nice to see you also, my good brother Demo. Let's go Bullrun.Life community. We are always very excited, looking forward to these events, these community sessions. We are always very thrilled to have these. Queen Hope, always nice having you here as well. Hello, everyone. Let's go. So I see the community is prepared. Community is ready. It's very nice. I can feed off of the energy of yours. So it's always a pleasure having you all here, community. None other than my brother Crypto Riser. Bullrun ecosystem. I'm excited for today's educational video with our amazing Steve. Let's go, Bullrun family. The pleasure is mine as well. Very thrilled, very happy having you all here today. And I'm really looking forward to today's session. Nancy, hello Bull Runners, hello Steve. I'm ready for another informative YouTube live session. Let's go Bull Run. Very happy having you here as well, Nancy. It's a pleasure. Thank you for your support. It's always nice having you here. Sharon, Queen Sharon, hello Bullrun.Life family. Grateful to be here and ready to learn. Let's go. Nice having you here as well. Always glad to have you here within the community as well. We see a lot of support from Bullrun women. Nice having you all here today in this live stream. Queen Margaret. Good evening, Steve. How are you, community? Glad to be here for yet another chance to learn. Beautiful having you here as well. We are always looking forward to being with all of you here today. Thank you for the feedbacks, by the way. I always want to make sure that the audio is well. Thank you very much for all your feedbacks. Very well. Queen Sally also here. Hello, Bullrun family. Nice having you here as well, Queen Sally. And it was a beautiful session that you had with Queen Sharon. Thank you very much for giving us a journey of your experience in the crypto space and with the Survivor and the Bullrun ecosystem. It was very wonderful. Good evening. Queen Martha says, good evening, Bullrun family. Let's go. What a wonderful topic we have here. Thank you, Mr. Steve. Nice having you here, Queen Martha. Thank you very much for your support and always being here. Mom, thank you very much. Greetings, Bullrun Survivor Army. Happy to connect with you here again. Hello, Steve. Looking forward to another educational and empowering live stream. Thank you very much for your support. Very nice having you here as well. Women for Bullrun. Hello, Bullrunners. Happy holidays. Glad to be here and ready to learn from our captain, Mr. Steve. Always a pleasure having you here too. Thank you very much for showing up. Queen Florence. Good evening, everyone. This is Florence. I'm a newbie. Very nice having you here. Welcome to the community. Very happy to have you all here. It's beautiful having so many people here today. And then we have here TJ Official. Hi, Steve. Are you here? Are you Steve from Shape? Yes. Have the Shape background as well. That's true. So it's beautiful. Welcome to the community. It's such a pleasure having you all here today, community. Welcome again to all of you that are able to make it today. It's such a pleasure. Looking forward to this. Now that I've welcomed all of you and I've set the stage for today's topic, the takeaways should be, don't be the eggs of liquidity. The second takeaway is the power of a community, the effect, the influence that a community has if we work together. And then finally, want to zoom in and just discuss, build bridges and build parallels over what type of an ecosystem we have that was built and developed that is ready from day one to really accommodate the communities, because it was the community that is really the driving force behind blockchains, projects, community ecosystems. So with that said, again, welcome all these newcomers like Florence and T-Japs. Always a pleasure having new people coming in. So we are very happy to have you all here in such numbers. With that said, bear with me. Let me share my screen. Let me give you the full screen and let's kickstart today's topic. So with that said, I always like us to kickstart the session with, with the market. It's always good to have a great overview what's going on in the market, but we all have our eyes glued on CoinMarketCap to just follow the markets. So I'm not going to spend a lot of time here. We are down almost 1% for the last 24 hours. Main takeaway here is Bitcoin is below 43,000 again. There's a small minor retracement going on here, but this is in the nature of the market. Once it pulls off, it will retrace back again. Another takeaway here is that we're still under the greed, because the market is driven by emotions, by fear and greed. Fear based on you are fearful of losing your funds, and you might be panic selling. And greed is FOMO, and fear is also fed by FUD, fear, uncertainty, and doubt. But greed is feared by FOMO, fear of missing out. So those are the two extremes that really move the markets. And talking about moving markets, let's get straight to communities. Like I said, first takeaway is the power of community, the strength of a community, and how it's the retailers. The retailers are the ones really behind and the force behind all this success on the blockchains, and that we see on the projects, on ecosystems. So this is major. This is very important to understand. And today, I really want to paint a clear picture so that once we get away from today, we won't have any doubt about the power of communities and the power of retailers. With retail, for those who are not understanding the crypto jargon, just means people like you and me, retailers that are community members. So with that said, let's take two examples. The main and the best examples are the ones that have been discussed in the last few weeks. That's Solana and Ethereum. Let's look at these two blockchains. We'll start with Solana because it's the one that was getting the most attention. At some point, Solana had flipped Binance and was the fourth largest cryptocurrency and blockchain in the industry. And let's see what was the drive behind it. What caused Solana to make so much noise and to be in the public medias all over Twitter and social media platforms? The case of that was it rose. It really crossed over $100 and went all the way to over $120. And all these, and I'm not going to use the word meme. So each time you hear me talking about community tokens and meme go hand in hand, because the drivers behind these are communities, retailers. So due to community token frenzy, this really drove the volume and the liquidity into the Solana blockchain. Of course, the Solana blockchain has cheaper transaction fees, and also it's faster. It's much faster and it has lower transaction fees. So that goes for them. However, so these community tokens have been just popping up on the Solana chain, and they've been the driver behind all the volume and all the liquidity and all the growth of Solana. So this is the whole engine behind this. There were all these community tokens. So it grew. The thing is, back in November, what happened was that liquidity locked, the value locked within the blockchain rose threefold, from 400 million to 1.3 billion. This is incredible. And let's just get to this. So what happened was, like we already said, besides the fast and speedy transactions and cheap fees, a lot of these community tokens were really the one that are behind this 3-week constant growth of Solana. So this has been just unbelievable what the community can do, what these retailers can be doing behind all these volume and liquidity that came and flooded Solana blockchain. Usually, what happens is with this trading volume and the network fees succeeded Ethereum's. Usually Ethereum is the one with the highest volume in transactions because Ethereum has the most applications on the blockchain. It has the most use cases on there. It's the most liquid blockchain. And usually Ethereum is the one really taking over and running as far as volume is concerned. But this time it was Solana, based on these community-based, community-driven tokens that really took over. And they dominated Ethereum's trading volume for the last 7 days, so over a week. Now, like we said, what's interesting here is, yes, Solana went up 830%. And in the last 2 months alone, it had the majority of that growth. So it's been really amazing. And another amazing factor is we all know about the bankrupted exchange FTX. So they were holding billions of dollars in worth of Solana. So even despite the significant sell pressure, still it held its ground. That just shows how much volume that came up. And if we look at some of these community tokens, the largest one, most famous one was called Bonk. These are no endorsements whatsoever. This is just to just make a point here. So this community token jumped over 1,000 just in November, late November alone. There was another one also that was inspired from this called WIF, and it yielded also over 10,000 in a short period. So data shows that thousands of these meme coins were really flourishing on Solana chain. This is just a snapshot of the last 24 hours. So there were so many of them coming out, and most of them were popping out and with low market cap and going all the way to the millions of market cap. So another takeaway that I want us out of this article, let's not lose focus. The point of this is it's the interest from retail investors. They are the drivers of the token growth, period. Solana didn't come with a new technology, cutting edge technology, or did anything extraordinary to cause or validate the drive or the, the liquidity and the volume on the blockchain. It was strictly driven by retail investors, people like you and myself. They were the driving force behind the growth and the rally of this token. So this is the takeaway of this today. I want us to understand in this article, it was retail investors that were the driving force. Now, let's look at some of the successes that took place. Some of the traders went away with 5.7 million after investing 30 Sol. This was roughly 2,200. And these traders made 5.7 million in just 6 days. So this is just to show the potential and the power of community tokens. They're undoubtedly very, very, they're not just driven by retailers, and they're not just widely accepted by blockchains because they bring the volume, the attention, the liquidity. But obviously, if you're trade smartly, you can also make a quick buck with them as well. So I'm not going to go to details and any names, but these are just showing what happened in the last, what other tokens, how many community tokens really took over Solana and brought so much liquidity and brought so much volume, and that made traders make a lot of money. There's this other one called Inu on Solana. Somebody invested $400 and netted over 2 million in 2 weeks. Another trader earned 1.5 million in another on the Solana network, of course, again, investing in another community token, but they invested more this time, 226,000. So these are just examples of what's going on the Solana blockchain due to this community driven tokens that brought a lot of liquidity, brought a lot of volume, excitement, and this caused the Solana token to really rally and hit these all-time high numbers so fast. Now, Let's go to Ethereum. Like we discussed, we're going to look at these two blockchains. They're the most spoken after, and they're having a rivalry. You have to pick your poison between the two. One is cheaper and faster. The other one is more secure and has more applications and more liquidity on top of it. So you have to just look at your pros and cons and pick your side if that's what you want. But the point here is usually it is Ethereum that really has the most, or had this craze going on. Back in May, there was this token. This is just another example. This is not endorsement or anything. What we're trying to do here is we're trying to make, we try to paint this picture of the strength, the power of a community, the power of retail, and how they're moving blockchains, they're moving volume, liquidity. They're the strength and the forces behind all these success and rallying of these individual blockchains or projects or ecosystems. And we can't stress this enough. So there's this other token called Pepe that came back in May. And the takeaway here is that it also made, like, in 1 week, it made 665, it went up 665%. And then the next 2 weeks, another close to 600%. It drove Ethereum gas fees so high that it hit a 1-year all-time high because of a community token. And the takeaway that I want us to see here is this. So Ethereum witnessed increased burns due to Pepecoin. Because Ethereum turned deflationary in 2021 in June, Ethereum underwent a hard fork, and this led it to be burning, deflationary. So the more Ethereum blockchain is being used, the more token it burns. Does that sound familiar, that tokenomics? But we'll get to that. Let's stick with Ethereum for now. So due to the high gas prices of this community token, Ethereum burned over 9,300, close to 9,400 ETH. Ethereum was burned just in 1 day alone, within 24 hours. Now, the takeaway of all of this, now we looked at Solana, we looked at Ethereum, and we saw how much power these communities have, how retailers have been the driving force behind all this. And it's these community tokens, community-driven tokens, and the retailers behind them that have been really pushing these projects, ecosystems, blockchains into this success that they experienced. And they were hitting high numbers that they didn't hit till lastly they hit them in 2021 during the bull run. So as we see here, the community has always delivered. It's been always the community that has been delivered. The failure here has been the platforms, the blockchains have been the ones, the projects, they have been the ones failing the communities. While the communities has been delivering, as we saw in these two examples, how retailers moved an entire blockchain and made that blockchain price rally for the last 3 weeks, almost a month. So we, as a cryptocurrency, the cryptocurrency failed the test of digital money. And it failed in being a medium of exchange and a store of value. And on top of failing on these two things, this article also, as we close out, it says something that we're all so familiar with. So all these community tokens, yes, they rose, they had a meteoric rise, and they were fueled by FOMO, like we discussed. The markets are always led by fear and greed. So it's fear of missing out and hopes of making a quick buck. The project does not have a lot of use cases, nor, and this is the most important here, nor does it have a lot of liquidity. So this has been an issue, not just with this specific project, but it's been an issue with even our largest cryptocurrency, Bitcoin. So this is an industry-wide issue, the liquidity issue. It's been a problem. It's been an issue. And I will pinpoint this even more as we get into the ETFs. So The bottom line here, the takeaway of these two articles is the power of retail, the power of a community, and how retail is the force behind the success of projects, ecosystem, blockchains. Without retail, nothing is going to happen in the crypto space. That's just the bottom line. If you see that there is a project with basically no use cases, no liquidity, and it still went, by the way, close to 2 billion in market cap within just a month, it's outstanding. It's just amazing to see the power of retail, and we can't stress that enough. So that was a picture painted for us to understand the power of retail. So with that said, here you see these are blue chip companies on the blockchain with amazing use cases and utilities, which these community tokens didn't have. However, they didn't achieve the type of numbers. Most of them have not achieved the type of numbers that these community tokens have achieved. Just so as a side note. So now let's get to another topic here. Now that we've discussed about communities, retailers, and how they've been moving projects, ecosystems, and blockchains, it's important now to really get a better understanding of another noise. Another thing that has been really all over the news is MicroStrategy. MicroStrategy is the first public company, if you're not aware with them, led by this individual who is, least to say, really all about Bitcoin. He's a Bitcoin maxi, just to call it how it is. So he has this company called MicroStrategy. He's the founder, and he's the first public company that is using Bitcoin as reserves. And they've been up 300%. They made 300% gain for the year so far. And mostly they've been investing heavily into Bitcoin. They started this back in 2020. We are going step by step. Keep in mind who's behind the rallying, the liquidity, the volume. Always keep in mind the retailers. Retailers are behind this. Without retailers, there's nothing going on. So that said, MicroStrategy was the first publicly traded company to have Bitcoin as its reserves. And it did extremely well this year so far. It's up over 300%. That's double of Bitcoin, by the way. So its stock soared 337%, and it outpaced almost every single company that had a $5 billion market cap, dollar in market cap. And its growth fueled a lot of companies' Bitcoin holdings, which the company started accumulating, like I said, back in 2020. So again, the vast majority of MicroStrategy's value come from Bitcoin. So this is really the backbone. However, they have a solid software business, and they're the leaders in the industry. We're heading somewhere with this. So, of course, all this success did not go unwarranted. All this success didn't go unseen. Wall Street was aware of this. They were so amazed by this story that what is this company that doubled Bitcoin's gains just in 1 year? Because Bitcoin had the most gains as far as assets, but this stock doubled Bitcoin's gains. So the takeaway here is one thing, and this is what we want to take away from here, because we want to answer two things right here. We want to answer two things here. With this all ETF story here, I want us to clarify and take away all the rumors, all the myths, and really call it how it is and bring more attention to ETFs. How did MicroStrategy purchase the Bitcoins. First of all, where? Let's start with the question, where did they buy it? And then we'll close out with how did they buy it? So with this said, this is the takeaway of this. This leads us to the next topic now. Funds that owns Bitcoin trades. Now, these MicroStrategy and Grayscale, they are purchasing Bitcoin over the counter rather than on major exchanges such as Coinbase, centralized exchanges, such as Binance and all other large exchanges. They're purchasing their Bitcoin over the counter. Why are they doing this? We spoke about this many times. Our leading cryptocurrency is very illiquid. It has one of the worst liquidity to market cap ratio. It's very volatile still. And we are talking about large institutions with trillions of dollars in assets. And right now, the liquidity of Bitcoin sits at 878 million. And we read here how MicroStrategy, when was that? Yesterday, they just bought over 615 million worth of Bitcoin. So obviously, they didn't buy it on centralized exchanges because there's not even enough liquidity. There's not enough Bitcoin for it to be purchased on them. So what's been going on is that they've been purchasing these large institutions. Let's stick with MicroStrategy has been buying over the counter. Now we'll answer two questions. We'll answer the first one is where and then how. So let's get to the where. So Coinbase was brokered by MicroStrategy to purchase 425 million through Coinbase. Now, we all looking forward to these ETFs, and the point that we are trying to make here now is to just take away the myth that these large institutions will come with trillions of dollars and just flood and pump our Bitcoin wallets. This is not going to happen, unfortunately. So this is what this point is all about. So Coinbase has been buying through brokerage services of Coinbase. MicroStrategy has been buying their Bitcoin through over-the-counter of Coinbase brokerage company. So not all of us can just dial up and call Brian, the CEO of Coinbase, and tell him, hey, I need to get some Bitcoin, but I don't want to move the market. So basically what that means is you needed the help to buy a large quantity of Bitcoin, but without moving the market. So this is how everything went. This is how it went. So all in all, MicroStrategy spent 425 million to purchase Bitcoin. Like we saw, Bitcoin is very illiquid. There's only 879 million. So it was impossible for him to just come to Coinbase or come to a centralized exchange and just dump 400 million casually and just buy Bitcoin like that. It would massively inflate the price. It would have hit all-time high already, last bull run's all-time high. So it was impossible. So what they did is he called up Brian from the CEO of Coinbase and told him, I need your help. I need to get some Bitcoin, but I don't want to do it on centralized exchanges. I need to do it through over-the-counter. So if you're not aware, Coinbase has deep reserves in Bitcoin, and I'll show you a statistic. I'll show you later on. So anyway, so Coinbase, they did an initial investment, which was for 250 million, just as a test drive. It was over a period of 5 days, and it was of course over the counter trade. Now, the irony of things is that just in May, Coinbase had acquired this company called Tagomi that was trading over the counter. So they put that acquisition right into use. So initially, And then they followed up with another 175 million, totaling 425. So like we said, MicroStrategy became then the first publicly traded company to acquire such a large chunk of Bitcoin in its balance sheet, on its balance sheet, and it served them as treasury reserves. Now, like I promised, this is a chart of the reserves of Coinbase, BTC reserves. As you see here, they were holding over 930,000 Bitcoin. And mid-year 2020, they started selling off their reserves. And we then found out to whom they were selling it, obviously to MicroStrategy. So, but they have a big chunk of reserves, just so you know. And the takeaway here is that this inspired Wall Street so much, and it was a big publicity for Coinbase, because now Armstrong's exchange can now claim bragging rights in the market as the one that helped a publicly listed company take a 9-figure leap of faith into Bitcoin. So this made Coinbase, this put Coinbase on the limelight, on the spotlight, because they were the first company that helped a publicly traded company to acquire Bitcoin. So this put them on the spotlight, and they've been doing this since 2020. So they have 3 years to the month, 3 years of experience of trading over-the-counter Bitcoin to large publicly traded institutions. So of course, and before we move forward, I'd like to just show you this. Who owns the most Bitcoin? Okay, so this is a nice website, and don't quote me on this. This is the source that I'm using, and I just want to, I'll make a point with this, but this just is a nice statistic where you see who owns the majority. Of course, Satoshi Nakamoto has the most publicly. He has 1.1 million Bitcoins distributed among 22,000 different wallets, different addresses, and then individuals, most of them are unknown. Exchanges, of course, Binance, Bitfinex, OKX, Robinhood, and Mt. Gox. They conveniently left out Coinbase. As we saw, Coinbase holds a massive pile of Bitcoin as well. They have a lot of Bitcoin in reserves. Governments, ironically, the US government holds one of the majority holders of Bitcoin as well. And then, of course, Grayscale, Block 1 is based out in China, and MicroStrategy, the one that we just looked at. This is just for you to understand what's going on. And another point I want to try to show you here, since we're on this here, the takeaway are these numbers right here. I already went ahead and did the math. So I calculated this. These numbers show you the richest addresses, like all the addresses between $1 and 10 million and above. So wallets holding $1 but less than 100, there's 34 million of them. And then from $100 but less than 1,000, there's 13 million of them, and so on and so forth. So the wealthier the wallets, the less of them are, of course. So all these numbers put together, all these wallets put together. Now keep in mind, I'm just using this as data. This is my source. So and Bitcoin price fluctuates, it's volatile. So these numbers obviously are not accurate on a daily basis. They change every 2 minutes because that's how volatile the crypto space is. But I'm just trying to make a point here. So all these wallets calculated amount to right above 54 million. 54 million and 44,000 actually. Now, if you take the wallets that hold $1 million worth of Bitcoin and above, it comes to right below 30,000. So 30,000 wallets hold $1 million worth of Bitcoin or above. Now, the rest of the 54 million hold less than that, hold less than $1 million. So if you do the math, if you calculate the 30,000 divided by the 54 million, you get a very ridiculous number. And this number is 0.05%. Let's do the math. Okay, let's take the 30,000 just for the sake of rounding up. This 30,000, I got them from the top wallets here, with starting at $1 million and above. So if I take this number and divide it by the entire, the rest, which is 54 million, and then to get a percentage, I have to multiply by 100, and then I get 0.05. What does this tell me? This means that 0.05% of the holders own the majority of the funds. So 99.9% of the other holders hold $1 million or less. So I really need you to understand and keep this number in mind, because this is big. This is mind-boggling. This just shows you how the wealthiest few are 0.05%, like we calculated. 0.05% hold the majority. The rest is 99.9%. They're the ones, and these are the retailers now. Now we're back to retail. Keep in mind, retailers are the ones that have been moving Sol price, have been causing Ethereum gas price to hike. And based on this, they have been the ones really behind. Retailers have been behind all the success of these tokens, projects, blockchains. So getting back to this, now that we've discussed that, keep in mind 0.05% are the richest holders of Bitcoin. 99.9% are the retailers. Those hold less than $1 million, between $1 but less than $1 million. 99.9% of them. So now let's continue with our journey here. Coinbase and MicroStrategy made the first transaction possible, and this impressed Wall Street so much that they wanted a cut of it. Okay, they want a piece of this. They want the same strategy. They're like, okay, let's do the same thing. These are the applicants of ETF, Bitcoin Spot ETF, as we know them, and this is not by order of because obviously BlackRock is the largest, but Grayscale is using Coinbase also. ARK Invest and 21 Shares using Coinbase custodian services. BlackRock obviously, Bitwise, WisdomTree, Invesco, Galaxy, so on and so forth. So basically the only one that is not using Coinbase, because they're actually Bitcoin miners themselves, is Fidelity. They've been mining Bitcoin since 2014, when Bitcoin was at $400. So they've been in the mining business for so long, so they're self-custodians. So that means that puts us, okay, right here. This article is very important. It's making a point. So Coinbase obviously is dominating Bitcoin ETF services, which is being a custodian. This is the whole message. Now, this article is a bit outdated because right now there are 13 applicants, not 12. But let's make the point remains the same. 9 out of the 12 are using Coinbase as custodians. Okay, and this is very important to understand what we're about to go through now. 9 of the 12 applicants will be using, like we saw in this chart, will be using Coinbase as custodians. So Coinbase is completely dominating. Once the ETFs are approved, those who are holding Coinbase stocks are going to be very happy. So Coinbase is going to completely dominate this industry, completely. And of course, you know, we have to do numbers here, okay? And we have to take away Fidelity, because Fidelity is doing self-custody. So we trying to make a point here. So that means it's not 12, it's 11. So, and the only ones that are still haven't picked a custodian is Hashdex, but most likely they're going to go with Coinbase as well, most likely. So we'll calculate with them and without. So let's take 9 out of 11, right? we get 81%. So 81%. Now, if we do 10 out of 11, because let's assume Hashdex will also go with Coinbase as custodian, 90%. So between 80 to 90% of market share from the word go goes directly to Coinbase. So Coinbase, from day one, the moment Bitcoin spot ETFs are approved, Coinbase dominates between 80 to 90% of the ETF custodial market. And not just to be custodians, but also as buyers. Like, they'll be using Coinbase's over-the-counter market, just like Michael Saylor did. So they also want to do exactly the same thing that Michael Saylor did with MicroStrategy. They will be purchasing over-the-counter, Bitcoin over-the-counter, and using Coinbase custody as well. So what's the whole takeaway from this? What's the takeaway from here? This is the takeaway here. Bloodbath for crypto exchanges, for centralized exchanges. Once spot Bitcoin ETF are approved, it will cause another bloodbath for crypto exchanges. This will be major because now we did the math. From day one, Coinbase is going to dominate between 80 to 90% of the ETF market as far as custody. Brokerage fees, they'll be earning brokerage fees for doing over-the-counter transactions. They'll be earning transaction fees, and they'll be earning also custodian fees, of course, as well. So they'll be completely dominating the ETF market. Now, what will this do to other exchanges? Obviously, they'll bleed out because centralized exchanges depend on volume. And if we see here, let's go here. Bitcoin alone has a trading volume of 16, close to 17 billion. And so is Ethereum. Let's go to CoinMarketCap here. CoinMarketCap shows you a total volume. Okay, it shows you a total volume. And right now the total volume is 80 billion, right? You see here 24-hour volume is 80 billion. But if we look at the top two, just Bitcoin alone, and then down the road in May, they're talking about Ethereum ETF as well. So Ethereum and Bitcoin alone have 40 billion in volume. So half of the market's volume goes directly to Coinbase, half of it. And that half, up to 90%, between 80 to 90% is dominated by Coinbase. So Coinbase will earn all those fees from trading fees, brokerage fees, over-the-counter, custodian fees, and this will bleed out the competition. This will cause the competition to completely bleed out. And another thing that will really take competition out of the race is the trading fees. So because like we saw, because Coinbase will be dominating by 80 to 90% of ETF custodian and brokerage and trading fees, they'll be able to bring their fees as low as they want to bleed out competition, other exchanges. And this will cause a lot of exchanges, centralized exchanges, to go belly up. They'll really lose a lot of market share, and they'll bleed out and eventually go bankrupt. So in foresight, it's very important to learn how to open your decentralized wallet. If you're in any of these centralized exchanges, they hold your keys. Once they go bankrupt and are in bankrupt proceedings, your assets are theirs. You don't hold the keys, the assets are not yours. Many have lost their assets that way. And we all know that Mt. Gox They lost their assets on that centralized exchange 10 years ago, and they still don't. They just settled that they're about to start giving them now, 10 years later, giving them back their assets, the Bitcoin. So just be careful with these centralized exchanges, because it doesn't look good. As Coinbase will be completely dominating the ETF market, and all these major players, like we saw here, will be using their services, it's going to be extremely hard for the competition to keep up. And just to put it in perspective, just the top 10 alone, here you see them again, are holding 43.4 trillion under asset management. So this just shows you how powerful these institutions are, and how much liquidity is about to go to Coinbase, and how they're going to wipe out the other centralized competitors, exchanges, and their competitors, based on the services that they'll be offering and the lower fees that they'll be also giving compared to their competitors. They'll be able to undermine the fees as low as they can and still be profitable, because they have up to 90% of brokerage fees, custodial fees, trading fees will go to them. And this is done by design. If you want to, Wall Street loves control. BlackRock loves control. Any risks are being eliminated. If you can control the company you are that is taking custody of your Bitcoin, it eliminates risks. So they'll have full control, and not just BlackRock alone, but this entire group, all of them. The majority of them are having, besides Fidelity, but majority of them are all going with Coinbase. So keep this in mind, that the myth that all these ETFs, they're about to come and pump our bags on centralized exchanges, this is not going to happen. And I just wanted to really highlight this, and for us to understand that just like MicroStrategy has done it, their idea is they want to buy large quantities of Bitcoin without moving the market. Over the counter doesn't move markets. This is why you see such articles. Oh, MicroStrategy purchased 14,600 Bitcoin, in which was worth 615 million. But why don't we see any movement? Why don't we see any movement on Bitcoin? Because they didn't purchase it on the public, on centralized exchanges. They purchased these over the counter. And this is what all these other asset managers are going to do. They're not going, we won't see a penny in any centralized exchanges. They're going to use over the counter. They will have retail be the exit liquidity. They will have retail be the ones, the same way they pumped Solana, the same way they skyrocketed Ethereum fees. This is the same way they're looking forward to retailers pumping Bitcoin for them, adding liquidity for them, because they're not going to risk the client's funds to buy a illiquid asset and risk their assets, clients' funds, and use the clients' funds as exit liquidity for us retailers. That's why they're avoiding exchanges, going over the counter, using Coinbase to choke out competition, so that they can use Coinbase to dominate and take out any competition. Right now, Binance is already limping on one leg. For the next 5 years, they'll be watched, monitored by the Department of Justice. So it's by design that they want Coinbase to dominate and to choke out the competition by giving them all the services, all the business, and the way exchanges survive is through volume, is through trades. And if all ETF trades go towards Coinbase, you don't have to be a genius to understand what's coming next. They will choke out competition, and centralized exchanges will be going belly up. So if you have any funds there, just be careful. and be sure that you hold your own assets, hold your own key, learn how to operate your decentralized wallets, learn how to open your decentralized wallets, learn how to use decentralized exchanges, because this is the future. You will need that. Now that we've answered where, let's answer the question how. So we've answered the question, where does MicroStrategy buy Bitcoin? Now let's go to the how, because this is the most important. How do they buy this Bitcoin? We know that they're using over-the-counter. We know that they're using Coinbase over-the-counter brokerage services, but how are they getting hold of that? Right here, you see that to fund the investments, MicroStrategy took a substantial debt in the midst of low interest rates environment. The company issued debt notes to fund Bitcoin purchases. So basically, in layman's terms, they leveraged, let me use even simpler terms. They used the value of the company to get debt, to get loan against it. And they used debt to purchase Bitcoin. So they are purchasing Bitcoin with debt, not with their cash flow, but with debts. So this is how they purchased it. Now, this gets interesting. He is even going on Twitter and boasting about it, talking how about MicroStrategy takes advantage of its position as operating as a company. And he can do things that the ETF companies can't do, like these guys. They can't do that. Where are they? They are not allowed to do this. If they want, they filed applications and they wanted to do the in-kind, but the SEC, Security and Exchange Commission, say no, you have to do the cash. So they wanted to do the in-kind and to do exactly what MicroStrategy did, leverage your $43.4 trillion, get cash, free money printed out of thin air, then go and buy the entire Bitcoin supply with it, with free money basically. So this is why the SEC stepped in and say, no, you can't do this. You have to use cash. Because imagine they have over 43 trillion. Just 1% is 430 billion. So they could, with 1 trillion, they can buy the entire supply. Because keep in mind, right now, the entire cryptocurrency market cap is 1.7 trillion. This is all the entire market cap of crypto. These guys are sitting on 43 trillion right now. Okay, 43 trillion. So they can easily buy whatever supply they have, especially now that they can buy it through their best friend, Brian, through Coinbase, over the counter, without manipulating the price, without moving the price, like they say here. They will do it. They could have done it. So this is why the SEC had to step in and say, foul play. You have to use the cash. You can't use leverage. Use the cash that you get. If you have to liquidate the funds, do it, but you can't use leverage against it. You have to use cash to purchase this ETF, because they have to buy real Bitcoins, and they can't use leverage like MicroStrategy did, using debts to buy it, because this will be another bubble waiting to burst if everyone goes around buying Bitcoin in such large amounts, ridiculous amounts, and using debts. So what if Bitcoin gets shorted and drops? That will be the end of MicroStrategy's company, because they heavily rely on Bitcoin and they're heavily leveraged. They're taking substantial amount of debts to purchase Bitcoin. And these asset managers wanted to go about the same way right here, and do the same thing. And let's just go through this real quick. So he made an example how he's doing it. So he was just talking about how, for example, they have 4.5 billion worth of Bitcoin, okay? And if they charge 1% fee, like other exchanges will be charging, They'll be charging. This will cost their investors or their clients 45 million in a year. So he's making an example that he can go out and borrow $1 billion at 0% interest rate and purchase Bitcoin with it. And instead of charging them 1% fees, he's actually giving them 2% yield, such as for buying stocks. So this is why you see how large investors are running to purchase MicroStrategy. So, and then he goes on to say that Bitcoin in 2023 alone went up over 150%, and he's only giving 2% yield. So that means the rest is a positive profit, okay, positive real yield. So this is what he's saying, and he's going about to boast that he can keep raising debts and purchase Bitcoin as long as he wants, leveraging his company, the value of his company, and keep buying Bitcoin. And ETFs cannot, asset managers cannot do that. So with that said, it's important to also highlight that now that we understand what's going on, this is very important that we understand now what's going on. ETF's approval doesn't mean liquidity will flood centralized exchanges. This is not going to happen. We see here, Coinbase has deep reserves. They have Bitcoin for days. So they'll be keep purchasing over-the-counter, Bitcoin over-the-counter from Coinbase and avoiding centralized exchanges, giving Coinbase all the power to dominate this industry, this market, and bleed out, choke out the competition so that they'll have full control. With they, I mean the asset managers. They'll have full control over Coinbase and use Coinbase as their centralized exchange and force both institutions and retailers to go over Coinbase because they'll be offering the lowest fees, and obviously they'll be the largest company in the space, dominating everyone, choking competition out, and that's the whole idea. So why am I saying, keep in mind the message of today was to highlight the power of communities, right? The power of communities is very important. Let's keep this in mind. The power of communities and retail, the power of retail. This is very, very important. And it's important to really put this in perspective. It's the retailers that are behind the volume and the liquidity. It's the retailers behind the success and the rallies of tokens, projects, ecosystem, blockchains. Without retailers, nothing would be going on. And these big institutions understand this. And this is why they're putting a strategy together to try to outsmart retailers by avoiding adding liquidity to Bitcoin. And Bitcoin is already a very illiquid asset, extremely illiquid. We already saw how, we looked at this chart here, and we saw how only 0.05% of the top holders own $1 million in Bitcoin or more. The rest, which is 99.9% of retailers, own between $1 but less than $1 million in Bitcoin. 99.9% of retailers. So they're the ones that will be hyped, pushed, encouraged to purchase Bitcoin before it hits $1 million. So the FOMO will be setting in, and a lot of unassuming retailers will run and do anything to get as much Bitcoin in their hands as possible. If it means selling your home, selling your car, doing whatever you can. Meanwhile, these large institutions are taking substantial debts. Okay, they're just taking debts against the companies and purchasing Bitcoin and dominating the market, the industry. Same thing with these asset managers. They'll be soon able to leverage the assets that they have and get Bitcoin basically at free cost. But it's the retailers once more that will be suffering and that will be used as exit liquidity, like it's been used to so many times. Like we saw, it's projects, it's protocols, it's the government that has failed retail many times, that has failed us communities many times, because these projects, especially the community projects that were able to experience so much success in the last bull run, they have failed communities because they didn't expect to be so successful so quickly. And just to show how powerful these communities are, in the top 20, there's 2 community tokens in the top 20, Shiba and Dogecoin. Dogecoin was basically made out of fun. It was supposed to just be a joke. And it's in the top 10 cryptocurrencies. Not because it's fantastic use cases and utilities, not because it's deflationary aspects or retention of liquidity and all that. No, just because it's large community base that is behind pushing it. So without the communities, once more, without retail, nothing will happen. And this is a trap community. Crypto community, this is a trap. This is a bubble waiting to burst. The myth that all these asset managers with their $40 trillion, they're going to come and flood centralized exchanges with funds. They're going to build up our wallets, pump our bags, and it's not going to happen. So what will happen is they'll keep purchasing Bitcoin over the counter. There won't be any liquidity coming into Bitcoin. And they'll use retail, as always, as exit liquidity. And this is unfortunate. Now, this is how it's going to happen. Once Coinbase chokes out centralized exchanges, because, like I said, the largest, BlackRock, Grayscale, ARK Invest, 21 Shares, all of them, they are using Coinbase. And Coinbase is going to have up to 90% of market dominance. They're going to choke out the competition. What's coming next will be another Black Swan event. This is just my theory. So a lot of exchanges are going to go belly up. They're going to start going into liquidation, like many others before them, because Coinbase will be completely dominating and choking them out. So this is by design. This is what they want. This is what they, I mean, these large asset managers. They want centralized control. They want to take out the competition. And they want to eliminate risk. So because many exchanges hold a large amount, a substantial amount of Bitcoin, they don't want that. They want all the Bitcoin for themselves. So this is how they're going to cause this run on the bank. And if a run on the bank happens, there'll be liquidations. People will run to start take their Bitcoin out, and mostly whales. Whales hate to lose money. So they'll run here, drain the liquidity, and take it over the counter. They'll try to take the liquidity out of centralized exchanges, and they'll try to drain the liquidity. And if this happens on exchanges, we all know what happens next. Exchanges will freeze. They'll stop you from withdrawing. We've seen all this last year. We've experienced all this before. You won't be able to withdraw. They'll freeze your withdrawal, and then they'll go into liquidations. You'll have to wait multiple years until you get your assets back, if you get them back, because this can take years and years. Mt. Gox is the best example. So once that happens, of course, it's the retailers that are going to suffer, that are going to bleed, okay? Because institutions don't have their funds. They don't have their money with centralized exchanges. They're safe. They're purchasing over the counter among themselves. But it's us retailers that will suffer the most. And once there's a bank run, a lot of exchanges will go belly up, and retailers, there'll be a run on the bank. Everybody will want to take the Bitcoin out at once. Exchanges will freeze that, stop it, go through liquidations. And that's the scenario that is going to happen, that is programmed to happen. And now, what's the point of this? What's the solution? Where are we heading with this? It's the retailers that are in control. It's us that are in control, the communities. These community tokens dictate everything. This is why we started at the beginning of the live stream. We started by highlighting the power of retail, the power of communities, how they've shifted prices in not just projects, but entire blockchains, how they've caused Ethereum to have such skyrocketed numbers, and how they're moving markets, going from zero to billions of dollars in market cap based on the retailers and the community. So what's important here is that three things we need to pay attention to. The first one is we have to understand that community-based tokens will be very important. It will be all about community. Community-based tokens will take the lead. Secondly, decentralized exchanges will be very important. You having full control, full custody of your wallet on a decentralized exchange, this will be important. So you need to step up your learning game. You need to learn how to open your wallet, how to trade on decentralized exchange, because that's the future. Else, if you have your funds on a centralized exchange, good luck, because Coinbase is about to choke the competition out. So really be careful, do your own research. Use this session today as a starting point to go through the rabbit hole. So this is why it's important to really understand that it's the communities that are behind all the success in the crypto space, in this industry. And let's not fall for this. Let's be careful. These are the things that I don't have a crystal ball, but just looking at what's been happening and how the market's been shifting, how MicroStrategy has set the tone for other institutions and asset managers to emulate. After seeing how Coinbase is getting ready to dominate the ETF service custodian industry, and how these large institutions and asset managers will be purchasing over the counter from Coinbase, and they'll be taking out competition. You just connect the dots and you'll see exactly what's getting ready to happen. And we are just saying that this is information and education. So do with it whatever you want. Just be careful as you're out there. As a community, as retailers, we are always being tricked into doing things or getting into things that is not in our best interest. So community tokens are going to dominate. DeFi is going to play a major role. And the long term is community-based tokens. So if you don't want to be the exit liquidity, you have to be part of a community that accumulates liquidity for you. Bottom line, there is no way around it, because this is the future now, community. And now we get into the part where we're zooming in now. We zoomed out and we looked at the challenges in the industry, the future that is about to come, the ETFs that everybody's talking about, but nobody really breaks it down to you to the point where you understand what's going to happen or what's about to happen, where the moving pieces, and putting everything together for you, community, that you can take this as a reference point and do your own research beyond this. So what's important for retailers is to not fall for this trap to be the exit liquidity. You need to be within a community. And another thing, like we discussed, projects failed retailers. Projects failed communities because they were not ready for the success. Many projects that succeeded last bull run, they were overwhelmed. They didn't see the success coming, and they didn't build a platform beyond that bull run phase. And right now, many are struggling to find out ways how they can be deflationary, how they can retain liquidity, how they can be scarcer. And even if they have a staking platform, it's really has not been working for years. and they don't have a sustainable ecosystem or mechanism in place that will really support all the community members, all the retail that will use that platform. So what's important, and the takeaway today is that learn how to open your wallet, the decentralized wallet. Learn how to trade on a decentralized exchange. If you have any assets on centralized exchanges, ensure that you transfer them to your custodian wallet where you have the keys to them, just to be safe. Be careful. And another thing that is important is that community tokens will be vibrant, will dominate. Community tokens will take more center stage. They're already doing it now, but in the future, there'll be even more. The largest communities with the vibrant ecosystems will do the best. Now we're at a point where we can shape our own future. We're at a point where the choice we make today will set us up. We have to be prepared, community, and preparation meets opportunity, and opportunity meets luck. Luck doesn't come with, doesn't just come and follow you like that. You have to be prepared and you have to be vigilant. And with that said, I'd really like to share something with you, because in this ecosystem, in this community, we do three things. We like to inform you, we like to educate you, and then we like to inspire you. So I will close out with an inspiration. But since we are still on this note, the bottom line is that you want to be part of a community that you are not the exit liquidity, but it's retaining the liquidity for you. It has an ecosystem specifically developed to retain the liquidity. And this is what Bullrun is all about. It aims to be the most liquid utility token in existence, and it has already built-in mechanisms within its ecosystem to retain liquidity. So this is the first of its kind, and it's built in such a complex way, but still in a way that it really gives you the peace of mind that the mechanisms, the ecosystem is retaining liquidity for you. It's deflationary. It's removing and reducing this. It's making the token scarcer, and not just with our main token. I will go to our other two community tokens as well. They're also deflationary, and they retain substantial liquidity as well in the mid to long term. So specifically, we are starting with Bullrun. There is a tax of 6%. Half of it, 3% on the buy and sell side, obviously go towards liquidity. And we've seen here, and I'd like to highlight this. Despite all the meme frenzy and all, let me remind us again. It was, who was the driver? It's the retail. Retail investors were the drivers behind the success, right? And another thing that is very important here is that, where is it? Right here. Despite all the hypes and all the drives and last bull run, all these meme coins, community tokens went up. What happened was, at the end of the day, they didn't have liquidity. Liquidity has always been the issue. And this has always caused a pump and dump, because they didn't have strong ecosystems. They didn't have strong fundamentals. They were not deflationary. They were not burning any tokens with every trade. They were not retaining liquidity. And the staking platform was a mess and not sustainable. To succeed as an ecosystem, it's really basic. You need three things. The first one, and these are the things that we failed in. You see that to be a medium of exchange or a store of value, you need key features. You need to be scarce. You need scarcity. You need to be deflationary, meaning with every trade, just like we looked at Ethereum, the more trades that go through Ethereum, the more deflationary it becomes. We have the same ecosystem, the same mechanism. The more trades are going through all our tokens, Survivor has the same concept. And actually, its largest wallet, second largest wallet, is a dead wallet, is a banned wallet. So already close to 6% has been banned. Same with Killer Whale as well. Its wallet also, he has one of the largest wallets here. With Killer Whale, it's eighth. The eighth wallet is the banned wallet. It's still climbing its way up. And with Bullrun, goes a step further and actually reduces the total supply. We started with 1 million, and now we are down to 974. So you see that our community tokens are extremely deflationary and scarce. They become scarcer over time. And this is what you want. That paired with liquidity, retaining liquidity for you, which we've seen here has been a serious issue. This article says it again. They didn't have any utilities or a lot of liquidity. Those are the two things. We have dual staking platform that uses, you can stake your NFTs as well. And the revenue generated from these NFTs, and these NFTs have utilities. They boost your USDC distributions. The revenue generated from these go towards liquidity as well. So you can also, this will be added to the liquidity as well. So not just the taxes, but the sales of the NFTs. And on top of that, our staking as well. We have a staking platform, and our reserves, which is 10%, is staked on the staking platform. And the USDC it receives also will be added to the liquidity pool. So our ecosystem was developed for one reason and one purpose only: to be the most liquid utility token in existence. And it has the right mechanisms in place to do so. To this date, this has been the downfall of many community tokens. Communities are strong. Communities are the bloodline behind every successful project, blockchain, ecosystem. But these communities never had a platform that is ready for them, that is deflationary and scarce, that has a sustainable staking platform that is based on the volume. Now, let's look at some things specifically. Let's just call things how they are, okay? Let's look at, for example, these volumes. This is inefficient. How can you have close to 500 million in volume and it's not being utilized? It's not being taken advantage of. Same here. These are hundreds in million, almost 200 million in volume, right? Community tokens have 200 million in volume, but what are they doing with it? It's not being used properly. So, you know, we are number people and we like to make examples. So just to show you how sustainable this ecosystem is, let's go through some numbers. We saw that the second largest community token had 200 million in volume, right? Let's just take 10% of that, which is 20 million, and do the math with that. So if we had 20 million in volume, and that will be 200,000 that will be banned. 200,000 worth of Bullrun will be banned and taken out of total supply, like we saw here, on a daily basis. This is how much we've went from 1 million. Now we are down to 974. With Survivor, it's the same thing. This wallet keeps increasing. We are closing in on 6%. And like we saw, Killer Whale is the same thing. These are all wallets that retain liquidities, and they're blacklisted. So they actually never will be added back into the circulating supply. So they're very deflationary. So back to this math. 1% will go towards banning tokens, right? And we saw that that's 200,000. That's just 1%. And if we multiply this, this same This 200,000 also will go towards USDC distributions. Those who are staking BRL will receive 200,000 worth of USDC in the staking pool as distributions for staking. All these are utilized through volume. And this is what we mean by they are not using the volume efficiently. It's not helping the token. It's not helping the staking platforms. It's not helping the community members. It's not helping the growth and the sustainability of the ecosystem. But the way we've built this, it really covers the sustainability part of an ecosystem. It caters towards stakers. We have a sustainable staking platform that as long as volume comes in, there'll be an infinite amount of staking distributions. And now let's continue. 1% goes to burn, 1% goes towards staking, and that's 200,000 worth. Now liquidity is 3%. So if we multiply this times 3, so 600,000 every 24 hours goes towards liquidity. How healthy of a liquidity will we have? Think about it. So if these community tokens that we see here had our mechanisms in place with 200,000 in volume and almost 500 million in volume, 500 million in volume and 200 million in volume. If they had our mechanisms, our burning mechanism and staking mechanism and scarcity, this will be the most vibrant communities in the space. But because the retailers, the community is the one that has been keeping them up, but the ecosystems have not been up to par, unfortunately. And this is why this article says that the Monetary Authority of Singapore identified that cryptocurrencies failed to be digital money. To be medium of exchange, you need to be liquid, and you need to bring liquidity brings stability. So if you're liquid, which we're retaining liquidity, and you're burning tokens, you're being deflationary, you bring stability into the ecosystem. And this answers the first question, medium of exchange. But how do you become a store of value? Store of value you become by being scarce. So the minimum you should do is be deflationary. That's the minimum you can do. And you become deflationary by putting 100% of your tokens into the liquidity pool. Many projects right now, they are not placing 100% of the supply into the liquidity pool. They are not. They are giving each other tokens, going through white sales, pre-sales, team tokens, and then they'll just use the community and then just dump these free tokens in the market. But all of our tokens, like Killer Whale as well and Survivor, the full supply has been put into the liquidity pool. So this is how it helps it. The message we're trying to convey here is that retailers, communities have been doing great. The only thing that has been failing them are sustainable platforms, sustainable ecosystem, sustainable tokens to rally behind. And as we've gone through these sessions, we've identified that communities are the force behind successful projects. And the most important thing to understand, excuse me, the most important thing to understand is that the future is decentralized. Learn how to open your DeFi wallet, how to trade on Uniswap. Open your own wallet, learn how to trade. Another thing you have to understand, us retailers, we have the power to move and shift projects. We need to pick our own destiny. We can't be falling or willingly being exit liquidity to these institutions that are trading behind our backs on over the counter and campaigning for us to be their exit liquidity. We need to stand up and really understand the power of community tokens, especially those that are developed with the best interest of our own communities, that benefit our members, the community, and are not the ones that are exploiting communities. This is very, very important. So, community, the takeaway from this today is to understand the power we have as retailers, because we are the ones moving, shifting projects, ecosystems, and blockchains. We saw 2 examples from Solana and Ethereum. We need to learn how to open decentralized wallets, have control over your assets, because when Coinbase chokes out the competition and centralized exchanges starts going through liquidations, you better have your assets in a DeFi wallet where you have the keys, not your keys, not your wallet, not your assets. So be mindful of that. Thirdly, community tokens will be gems. They'll be dominating, and people will be flooding DeFi exchanges and looking for community-based tokens. And you want to be part of a community token that is vibrant, that is built and developed based on the challenges that was seen and observed in the last bull run, that was developed based on the 5 top cryptocurrencies in the space, that was developed to be deflationary, scarce, liquid, and sustainable, and that uses the volume and not waste it to be sustainable. That's the type of platform you need. So far, communities have performed, retailers have performed, but platforms, ecosystems, blockchains have failed them. And this is an opportunity for us that we have a platform that is prepared from day one to be deflationary, to be scarce, to retain liquidity, and to have an amazing staking platform that issues distributions based on the volume that it's used. And the more the platform is used, the more deflationary, the scarcer the token becomes. There is nothing like it out here, community. And do your own research. Like I said, this should be your starting point to start doing your own research. We are here to inform and to educate and to inspire. And I like to close out with an inspiration. So, summing up, learn how to open your DeFi wallet. Learn how to trade on decentralized exchange. Keep your wallet safe, and ensure that you also understand that don't be the exit liquidity no matter what. Be part of an ecosystem, of a community that retains the liquidity for you and that was built to retain the liquidity for you, and that thinks about your interests and is not leading you to become the exit liquidity on a global scale. So pay attention, do your own research, go through your rabbit hole and understand deeper what was told today. And finally, community tokens are king. They're dominating, and they will always dominate. So pick your community wisely, pick your project, your ecosystem wisely, because it will determine your future success or failure. So with that said, community, I'd like to, now that we've informed and educated, we like to close out with an inspiration. What I want to show you here is very interesting. On the month, it was December. On this day, on this month actually, and this was 5 days ago. So 5 days ago on the date, 2008, so 15 years ago. Let me put this on mute. NASA had called Elon Musk was going through financial crisis with his company SpaceX, and he was at the brink of a bankruptcy, actually. And what happened was, at the stroke of the minute, out of nowhere, NASA called him and awarded him a 1.6 billion contract from NASA, and it saved the company from bankruptcy. And not only SpaceX was facing bankruptcy, but Tesla as well. So 2 days after NASA gave him this contract, it gave the Tesla investors confidence, and they started investing back into Tesla. And because of this gesture, within 2 days, it saved Elon Musk's SpaceX and Tesla from being bankrupt. And as they say, the rest is history. So he went from almost bankrupt to being the richest man right now, based on Forbes list. So he had to make a choice with these funds. He could either save SpaceX or save Tesla. Guess what he did? He split it in two and saved both. So whatever choices you make, like we said, preparations meet luck. You can call it luck. Oh, he was so lucky. What a luck. He was lucky. But I believe that if you're prepared and you make the right tough choices, you'll always succeed. And call it luck, call it fate, call it whatever you want to call it. But it will follow you. It will be by your side. But you need to make the right decisions so that you don't fail. So this was very inspirational, and I can share with I'll share it in the group or on Twitter. I'll retweet it. So actually I can do it now so you can have it as well. Let me like it and retweet it so you can watch it, because the audio, I don't want to play the audio with the music. I don't want to be demonetized. So that's the message. We want you to be inspired. We want you to be informed, educated, and inspired. That the choices you make today will this will determine your fate of tomorrow. So we're here just to guide you, inform you, and educate you, and tell you how the industry works, the challenges within the industry. Tell you how our ecosystem works, how we are using the challenges, making them opportunities, and how we are addressing these challenges with solutions. And we're giving you inspiration of people we admire and look up to, and just see them so successful. But we don't know that they were also at the brink of bankruptcy before they made it. So your choices you made today will determine your success or failure tomorrow. With this information you had today, it's up to you to make the right choices. Go through your rabbit hole and do your research. Use this as a starting point to complete your research, to have a better idea and better understanding of what's coming. Be aware of these consequences that we talked about. Everybody's anticipating ETFs to be approved. But like we said, these large institutions are not going to delve or risk investor funds in an illiquid asset. That's why they've been purchasing through Coinbase over the counter. MicroStrategy set the tone and everybody else followed. All these asset managers followed suit and are also going with Coinbase. Coinbase is about to choke out the competition, and they'll be the dominating centralized exchange. With that, a lot of other Black Swan events are about to take place, unfortunately. Or shakeups are about to happen, maybe takeovers are about to happen, but these are just connecting the dots. So be mindful that we, the community, have the power to control the outcomes. We've always been the ones controlling the outcomes. Community tokens dominate, and we move blockchains, we move projects, ecosystems, communities. But what has failed so far is not the retail, is not the community, but it's the platform. And now we have a platform that can sustain, that is built to retain liquidity be scarce, and so on and so forth. We are focusing on 4 major aspects, and I'm closing out with this. The Bullrun ecosystem focuses on 4 major aspects. The first one is what we're doing right now, education. We educate, we inform, we inspire. Education, lack of education causes us to make vital decisions, especially being in an industry where it's dominated by fear and greed. So it's emotions. So if we're not educated and informed and inspired and don't have that courage and understanding, we'll make decisions based on emotions and not on rationality. Second is liquidity. Like we said, we are here to retain liquidity. We aim to be the most liquid token in existence. We have mechanisms in place, tokenomics, fundamentals are in place to retain that. Thirdly, security. This is why with security we mean there's so many scams and rug pulls in this industry. So we aim to develop our own tokens. Like we said, this is our newest token dedicated to women in this space. It's dedicated to the women that don't have a voice, that are underrepresented in this crypto space. It's the first of its kind. We like to come up with originals. We like to set the tone and be the first to have a token that is dedicated to women specifically. Of course, men can purchase the token as well. Of course, we can rally behind and support the women as well. It's just a symbol that this token is dedicated to empower women in this industry and to give them a platform where they have a voice. So this is why we develop our own tokens, because there's so many scams, rug pulls, honeypots out there. We don't want to expose ourselves to those. So we decided as a community, we develop our own community tokens in-house, and we have the first mover advantage to get in this early. Another one is Killer Whale as well. This is strictly for whales. So if you're not a whale and if you're not built to live the whale life, don't worry about it. This is for those who are really want to be part of a community of whales. So this is the token for it. And then of course Bullrun is the main token as well. And this is the only token in the ecosystem that you can stake. But all 3 are extremely deflationary, like we showed you earlier. And all 3 are built to retain liquidity. Finally, social network. That's our 4th item. What do we mean with social network? This is also what we are building right now. All of you that are watching right now, you are part of this social network already. Like I see, we have 44 people right now watching. We intentionally are not using influencers from outside, especially paid ones. We are our own influencers. We make noise within our own communities, and we are using these platforms to educate, inform, and inspire ourselves so that we can bring awareness to our ecosystem, what we do. So building a social network means within our own community, we have influencers that are running Facebook or social media such as Facebook, Instagram, TikTok, YouTube. We have content creators. We have community leaders. We have so many talents, networks, whatever you can contribute to add value to this ecosystem. This is what we mean with the social network, where we can leverage, we can use each other's talents, networks, connections to bring us to the next level. This is the key to everything, and this is the whole idea of retail community, because this is the engine. The social network part is the engine of everything, because this is what we need to bring awareness to us, ourselves, and to our ecosystem, to our community. This has been a lot of information, and we are closing in on almost 2 hours. So like I promised, I'll be making individual videos based on specific topics that it's more digestible. But this was important for you to have a broader picture, a broader idea of what's happening. And the reason why we stressed on liquidity is because it's the one thing that failed a lot of projects that was successful and hit double-digit billion-dollar market caps last bull run, but they're nowhere to be seen today, or they're really struggling and stagnant. They can't grow. They're not sustainable. And to avoid that, we built and developed an ecosystem that addresses that, and that is built to sustain a community that is ready to be part of this movement, that is ready to make a difference, that is ready to use this platform the way it's supposed to be used, and that we can achieve everything we put our minds into as retailers, as a community, as community members, as an ecosystem. So this was the message for today, community. When we started this session, we discussed that we want to highlight three things. The first one was the power of retail, how we can shift projects, ecosystems, how we can shift blockchains, and how we have the power to do so. The only flaw was that communities, retailers, have always been the force behind us, but platforms have failed us. And here we have one now. The second one we discussed was, we also wanted to inform you that you need to learn DeFi. You have to learn how to open your wallet, DeFi wallet, how to trade on DeFi, decentralized exchanges. Those are very important aspects. Finally, pick your community, because your communities led tokens are the future, and that's where the success lies. And that's the most important thing. Pick your community and be part of it. Add value to it. Participate. Be proactive. Be consistent. And this is how we're going to succeed, because communities are the ones that the engine behind it, and the retailers are the ones that need a platform like this that they can call home, that is in their best interest, and that is built to be sustainable. So this is the message for today, community. I hope it brought a lot of value to you, because we always aim to inform, to educate, and then close out with inspiration. Use this today as your starting point to do your own research. We can inform, educate, inspire you, but you have to make the decision. You have to make your choices on your own. We're not here to sell you anything. We're just here to inform, educate, and inspire. You take it from here and make your choices based on your research and based on your own decisions. So this is it today, community. And as always, I will bear with me. I will come back to the comments and see what you have there. As I'm reading the comments, to see whether you have any follow-up questions or anything you want us to discuss. So see my brother Glenn also joined. That's great. NB2, nice having you here as well. Queen Martha, amazing having you here. And of course, everyone else that is here, once more, thank you so much for showing up. It's amazing. It's a great having you all here in such great numbers. My brother Glenn says 54 watching. This is amazing. Actually, we broke our target. Our target was eventually to have 50 to watch, 50 to participate in our Twitter space and on VCs. And this is amazing. This is a great step forward. So congratulations to all of us for achieving this small milestone as we're growing. The aim is, of course, next step is 100. So let's keep baby steps, keep going up and up. T-Japs official. Steve, are you invested in meme coins? If so, which ones are your favorite? Like I said, I like to refer to them as community tokens because they are the future. It's the communities that shift, that are shifting and making the moves. It's the communities, the retail. So, and more community tokens, they're already making moves, but they have not found a home yet. You know, like retail has not found a platform that can sustain them. That's why there's mostly pump and dumps with these strong communities, or they're not sustainable, unfortunately. So we aim to be this platform that will be able to sustain the volume, the liquidity that is brought by these retailers. So, and they're the ones that I discussed, the ones that we discussed today. Welcome to the community, by the way, TJAPs. Very nice seeing you here as well. Feel right at home. Join our Telegram group, follow us on our Twitter accounts, and be part of it. Looking forward to hear more about you and from you. Right here, Queen Margaret, important information. Thanks, Steve. Thank you as well for showing up and being part of this today. Our investor 2sec, so impressing and educating. Thank you very much that you're also showing up. This is great. Mr. Glenn, my brother Glenn, 49 watching and 31 likes. This is great. These are great numbers, and it's amazing. So yeah, let's ensure that we really participate well and we stay engaged. Congratulations to such great audience. Thank you all for participating and being part of this. Yes, of course, hit the like button, be part of it. Brother Theo also seconds you. I see we have accountants here. It's 57. This is great. Queen Sally here. Who wouldn't love to be part of this educative, inspiring, informative community? Thank you very much, Queen Sally. Absolutely. This is what we aim. We see that knowledge is power, and the more educated we are as a community, the better for us. And knowledge is power, and it always will. Brother Theo, top-notch education, information, and insight. Great brother Steve, thank you for taking the time to break things down and putting it all together in a way that is clear and easy for us to understand. The pleasure is mine. Thank you all for showing up in such a great crowd, such great numbers. It's incredible how we are really growing so fast and bringing the curiosity. You know, people start asking, what are these 50 people listening to? What are they doing? What is this community all about? Let's keep this momentum, this energy going. Queen Hope says, powerful. Queen Nasia, informative, thank you. Miss Queen Sally again says, priceless. Queen Sandy as well. Queen Madi, thank you very much. Informative session, thank you, says Queen Sharon. Queen Lati. Oh, thank you so much. Very informative and educative session. Let's tighten our belts, community. Queen Lati, it was a very wonderful video that we saw that you and Queen Sharon made. It was so inspiring. Thank you very much for sharing your journey with us, with the community. Queen Hope, thank you, Steve, and we appreciate you as well. Very much. Thank you for being always being here, being consistent. My great brother Theo, my great brother Steve, you mentioned how Coinbase stocks will be positively impacted. I was wondering, how will this impact Base chain itself? They are not related because like you said, this Coinbase stock is the stock, and the Base chain is on the blockchain actually as well. However, you know, it brings a lot of attention to them now, you know, and they'll be dominating the custodial era as far as ETFs, custodians, and that will bring a lot of business to them, of course. And they'll be, when you're dominating ETF custodians and earning so much brokerage fees and bringing attention to yourself, obviously they'll get also a lot of business on the blockchain, because people always want to be associated with winners. And also once they choke out the competition, there won't be many options around, and usually people like to tend to go with the biggest, and with the most successful, widely adopted base chain. So I believe it will definitely do good as well. It will do great as well. Community, this was wonderful. I'm really grateful for you showing up in such great numbers. It's been wonderful being here with you, having this dialogue. Thank you for honoring and coming with such great numbers. It's inspiring. Without artificially expanding this session, I just want to thank you all once more for showing up. Queens and kings, thank you for showing up here. Especially, we got a great crowd of the Bullrun women. You are all very much appreciated. Thank you for showing up. I believe, I hope it was informational and educational, and I hope you can leave inspired as well. With that said, those that are not here with us, I hope you can be also take advantage of this session. With that said, I want to wish everybody a wonderful rest of the week. And we are always looking forward to our next community event, which will take place on Saturday, same time as today, on our on Telegram, on our main Telegram. So all of you that are new, that just joined today, or are part of this community today, or listening in, feel free to join our socials, join our Telegram groups, follow us on Twitter, and be part of this vibrant community. Let's grow. Let's keep the energy going. Let's keep, staying informed and educated and inspired as we're entering this liquidity phase. Let's not fall into the traps of being the exit liquidity. That's the bottom line message. Let's ensure that we are part of an ecosystem that is actually retaining liquidity for us, and that has the best intentions for us, and that works for us. So that's the type of ecosystems we want to be part of. And let's be informed. Take this session today as a starting point. Go through the rabbit hole, do your research, and make educated decisions, because your decision today will dictate your success or failure tomorrow. With that said, wish everyone a wonderful rest of their week. Looking forward to see you again on Saturday. And as we are approaching New Year's, let's be safe, stay healthy, enjoy your family, get some fresh air out there. And I hope you stay safe, stay healthy, and looking forward to see you again on Saturday. Much love to you all. Thank you very much. And see you next time.